Hello there and welcome back to another episode of Across Markets by Business 360. I remain your host, Vera Fishcluster, and joining me as always is...
My name is Joy Abia and I'm your co-host on this space. All right, so we're opening today's show with news from the stock markets. Nigeria stock markets added 2.53 trillion naira to investor wealth in 5 days. So at the same time, banks are charging businesses a maximum of 33.16% to borrow money, and that rate is coming down like cold syrup. AMCON is selling Intel, the ghost of Nigerian telecommunications, and in an aquaculture pond outside Lagos, a startup just closed $1 million commitment to put AI underwater. One economy, 4 different speeds. Now, let's get into it. All right, so here are important numbers on this section of the show, the economic pulse. First of all, so the stock market gained 2.53 trillion naira to basically moving up from about 157 to 159.589 trillion naira. This is as of July 25th, 2026. Basically, the volume growth went about like 57.28% growth, right? And that's week on week. The deals basically went up 12.75% to 255,589 points. Now, these are numbers. Numbers may sound boring, but then they are very essential to your decisions and why we definitely do the show. So, the financial services sector, there are 2 top winners amongst two top, sectors that dominated amongst these, that dominated in this part, in this story, and that's the financial sector and the consumer goods sector. Okay, so what's moving this market is not speculation, it's earnings season. It's banks that are posting their strong, half H1 numbers the first half of this year, and the Dangote refinery IPO story creating liquidity expectations. And critically, it's the CBN's sustained rate pause, giving investors enough policy certainty to commit capital. A 54% jump in weekly turnover is not a noise signal. This is institutional money moving. Okay. And I think I also did a little bit of a breakdown on this story or on this news, basically about the gains in the capital market. I did that and I posted it. Basically, I always do all of these things on LinkedIn. So I did do some some breakdown and analysis of the fact that, the top winners. So we still keep seeing the financial services sector take the lead, in this reform, in all of the reforms, basically Nigeria's reforms for the past, basically this year. Right. So we've been seeing the financial services sector that can only tell us multiple things, but all in one, that money still is the places where money is handled is still one of the most promising, sectors in any economy. Right. So basically the all share index went up, by approximately 55.81% year to date. So as of early July, that was the numbers. So what are your thoughts on, Vera earlier was asking me that she wants to we're thinking of investing. So due to the gains and the news about the gains in the stock market, I think she got interested and she's like, okay, we want to let's look at investing. Right. I've never actually attempted to invest in Nigerian stocks. That's me calling myself out. But I think this year has actually been very, not even just this year, I think since last year, because I used to follow I think her name is Tosin Olasende, the founder of Lada. And she was posting a lot of, if you invest 100k today, what would you have gotten by the end of this year? And that was just by investing in Nigerian stocks. And that actually intrigued me, even though I did not make the move just yet. I just know that it's about time to make that move. So Vera, what are you thinking?
Well, my thought on this is that, as we've been continuously saying that, the stock exchange and the Nigeria Stock Exchange has been doing well lately, the couple of months and all. And, that's moved me to like wanting to also invest. I already have would I say the resources? I have everything that is available, but like to get started is what I'm currently after right now. So in as much as I'm seeing the progress, right, I'm seeing the numbers and I'm seeing the growth level at which it's all moving, I'm interested. And if any other Nigerian also sees this, we would be interested in being part of the people growing in the economy, right? Not just seeing and hearing it, but like we would want to also partake in this growth and all. And it's going to be a great thing if, in as much as you are a Nigerian or you have expenses to meet and all of that, I would love and encourage that we also buy stocks and also invest in these things, because one way or the other, we're still going to get the gains and all of that, and we're still going to grow. So, I mean, aside from just saving, your money is growing somewhere and all of that. So I think that's my own take on this. In as much as we are seeing the green lights, we're seeing the progress. So I want to be part of the moving train.
Okay. Which I think some of my suggestions, first of all, we can see that financial services and consumer goods are actually leading in the stock market. And while it's first, like this is like the first thing, right? I mean, investors would always move money around, right? And so this is one of the gains that we're seeing now is based off of all of their money movements. And I think also a huge part of that was from Mr. Femi Otedola. He also from First Hold Co was also one of the biggest gainers from these gains. So my first thing I would say is for businesses that may not, like any other sector that's not ranking in biggest gains, I do think that if even if you do not have the data out there, right? I feel like maybe other sectors you should join the moving train, not just in obviously you cannot try and overtake any sector just by thinking you can overtake, but being part in the sense that you're making investments in obviously all of this with financial services, having proper portfolio managers, take a part of your income, to invest it in other forms of money of securities. So this is that's one. And then two, for anyone that may in case you're watching now and you're like, oh, I don't own any Nigerian stocks, and you want to get into this trade, like we've probably spoken about it multiple times, and so it may start to intrigue you. I would say that for companies that do have allow people access to the NGX, right, the Nigerian Stock Exchange, to invest, I think that there can be a lot more, this is in terms of for inclusion now, there could be a lot more processes that could be tweaked in how people are onboarded. Now, not the average Nigerian, for example, now the average salary earner may want to invest the least, right? It can be 5K, and I'm talking from just a basic salary earner level, 5K to about, let's just say from between 500K to 100K. Right. I do think that the technology can be deployed in sense that it's not just enough to think that you can I think we need to improve on the investor education now.
Yes.
And not just education, there's a lot of what are stocks, a lot of how to invest in stocks, what to do, and all of that. But I just do think that it can be improved on with technology, especially AI. With the era of intelligence, we can apply intelligence to helping people, helping the average consumer, be a part of this, the stock market boom. Okay.
And also understanding. So.
Yeah. So, I mean, those are just I would say, my takes and recommendations for based on this story, right? So, I mean, there's one question that I would just ask, right? Is the NGX, like, is this rally a leading indicator of broader economic recovery, or is it an island of optimism in a sea of elevated borrowing costs, right? Food inflation and working capital stress for the majority of Nigerian businesses. We're going to get into that.
All right, so let's leave the stock market and move down to banking. All right, so banking and credit transmission. So the lending rates as of May 2026 was 34.78% and has gone down to 33.16% as of June. Also, the year-on-year, also same rates as of June 2025, it was 29.51%, which is like a year-on-year increase of 3.65 percentage points. As of January 2026, the rate was 32.68% and spiked to 35.17 in February, even after the MPR cuts, right? Also, the MPR, unchanged since February 2026, and it had a rate of 26.5%. That is 7-point gap between policy rate and max lending rates. Also, the IMF assessment also shows that it's a rocket and feather behavior. That is, in as much as the rate goes up faster like a rocket and goes down really slow as feathers.
Okay, so on this story, right, the lending rate it's dropped, right, from 34.78 to 33.16. Now, what does that mean for everyone, businesses, especially businesses and consumers? Okay. So first of all, we're looking at what the IMF has named this a precise, rockets and feathers, because as of the rates are fluctuating really, should I say sharply, and sometimes, but we're just sitting on those rates. So the rates are going up fast, like a rocket, and then coming down slow as a feather, like what Vera just said. So 100 basis point CBN rate hike adds 175 to 180 basis points to lending rates. So 100 basis point cut, right? So the banks will pass on about 25 to 30 basis points, and the asymmetry is structural, not accidental. It's how Nigerian banks protect their net interest margins. Okay, so basically what this means, like I said, let's go into what it means. Credit costs are slightly easing, but they remain brutal. So 33.16% maximum lending makes productive investment financing near impossible for most businesses. So we are definitely going to have to watch out for, the half of the year 2026 based on this lending rates. How is it going to, affect loans for businesses, how they're going to build, and basically cost of capital, and that's going to obviously affect the revenue and their output and all of those things. So we're definitely going to be looking at that for businesses and the SMEs. Then for investors, this means high yield treasury bills. Like, they will still remain attractive at this point. So we're definitely going to watch out for banks with strong liability management. Those mobilizing cheaper deposits will expand margins even as the lending rates ease. So investors, like maybe Vera, for example, that you want to start, maybe based on, so we're looking at a booming stock market, and then we're also looking at ease lending rates. So now the implication of this is that we're definitely going to see, on that lending, on the treasury bills are going to still be high yield and then maybe attractive. So for anyone who's starting to invest, right, treasury bills will be one of the places to start. Okay, it's low risk, and now from the implications of this, it might be high yield for a season. So we're still definitely going to be looking at it and monitoring, of course. So for policymakers, the CBN just introduced this NOFA, that's the Nigeria Official Overnight Rate. Okay, this reform is the right structural move, but without competitive pressure on banks from non-bank lenders, transmission will stay slow. Okay, all of these were gatherings from analysts and basically some sort of speculations on commentary on this particular topic on the lending rates. That's what I'm bringing to you. Okay, we're definitely going to watch out for that to see how that comes along anyway. So yeah, so we're just going to be moving on to another significant
something like I want to
Oh, okay.
Yeah, also seeing that it has gone down to 33.16%, it actually shows an improvement, right? Because the higher the rates, the higher your interest for borrowing, and the lower the rate, lower your interest for borrowing. So if it's slow, right, it's actually an improvement. The only reason is just that it's slow when it comes, just like we said, it goes up faster but comes down really slow. And I'm not me trying to like maybe take sides of the bank or whatsoever. This is like, I feel like we need to understand like that banks also have they also borrow money, right? They also have they need to manage their risks. They need to worry about inflation. They need to worry about customers who also fail to repay their loans and all, right? So while it's coming up so fast, they are kind of taking their time, or like not rushing into bringing it down so fast, because they need to be cautious of how they maximize and also use the necessary resources and finances they use in terms of managing the whole system in banking. But the question is, have they become like too cautious of even like considering the customers, right? So I feel like it's something that we need to also think on and put our heads down on to as well. Also trying to understand how these things also works. In as much as we are aware and we understand how it works, it would give us an idea of, okay, things have to work accordingly, and yet it needs to make more sense.
All right. Thank you, Vera. All right, so we're moving on to the feature spotlight, and we're spotlighting AMCON's move with Intel, right? And obviously, to begin, AMCON is the Asset Management Corporation of Nigeria. Okay, and so basically, the AMCON's the first half of the year, AMCON was able to recover a debt of, let's say 160, I wouldn't say it's exactly the numbers, 165 billion naira, and it's up 64% from 107 billion as of the first half of 2025. All right, so basically the cost to recovery ratio is 2.3% by any standard. So that's by any standard, it's efficient, right? So basically, the Intel's background is a successor to Nitel. You remember Nitel, right? The state telecommunications giant as of the time.
Yeah.
But then it was taken over by AMCON after years of distress. So just to be precise about Intel, right? It's not functioning as telecoms company it's not functioning as a telecoms company in a competitive sense right now, right? It has assets, spectrum, infrastructure, some legacy value. So what AMCON is selling is the potential for a strategic investor to deploy capital on top of those assets in a market where MTN, Airtel, Glo, and the likes already dominate. So the question is, who bids and at what price? Okay. Do you have any comments on this?
Yeah, my little take on this is that it's not just all about selling Intel, right? It's also finding someone who can actually rebuild it much better than it was before, right? So because of changing ownership, right, is not something a fixing business should do, right? Because they are not so strong, right? So if selling it is selling it to someone who would actually make it better than it was, and changing ownership is not just something to do when fixing a business. Right. So that's just my own little take on that.
All right, so the Supreme Court's judgment obviously would matter here. The court has confirmed that AMCON can dispose of collateral, right, regardless of the size of the debt. This is a significant enforcement tool. So it means that AMCON can move past smaller obligors that it may have previously deprioritized, right? So the 64% recovery jump is likely structural, not episodic. So it's not about now. It's probably been like a structural thing, and it's you know built, taking based on different steps they've been able to get here. So it's not just out of the blue. Okay, so but then the bigger question is that Intel divestment success depends entirely on who buys it, right? Like I think Vera said, it's about who's going to come in and then do, make it better than it ever was, and bring it to the competitor level of the highest, like the best performing, obviously the most popular telecoms in Nigeria, right? So the government's test is whether its divestment program produces operational improvements or just a change of ownership. Operational improvements. So definitely let's look at what's going to be happening, and then we'll definitely bring in more updates on this move with AMCON and Intel. All right, on to the next.
All right, so that takes us to our watch list. That is what we want you to be looking out for this coming week. So there's Fishcluster, that is AI goes underwater. The AI plus underwater robotics for commercial fish ponds, Nigeria, Senti 100 robots, Forge 200 feeder, and FOS 2.4 software. The traction is 4 major fish pond operators committed, and it's $1 million in pre-pilot commitments at 1.5 million per unit. So the problem it solves is that it feeds 75 to 87% of fish farm costs. Nobody can see underwater feeding behavior invisible. So the problem it's going to solve is that it'll be feeding 75 to 87% of fish farm costs, and nobody can see underwater feeding behavior like the invisible waste, ammonia and slow mortality. Also, we should also take note of the founder, Samuel Eze, who is the ex-RPass FinTech bank financing partner on board, and 4 academic advisors. Also, 1 million pounds under commitments. The end goal is to credit infrastructure for aquaculture.
All right. This story was actually very interesting because I've been reading about what AI could do, and I think also from reflecting from the past episode that we had with the Madam Helen, Omomi Helen, who's in the in agriculture, and she is doing quite some fits there with exports. So this story was fish farming, they okay. So basically, one of the things that causes the fishes for fish farmers, maybe most when we talk about fish farming, mostly I always picture catfish, because that's mostly the fish that I see in ponds. So whenever the fish is fed, or the fish are fed in the pond, most of that feed goes, they don't eat everything, so most of that feed goes in, and then it turns into something that's then may end up poisoning the fish, right, and not obviously making them healthy. So deploying AI I feel like that's just brilliant, so that you can actually see what's happening underwater, see what's happening in the pond, and basically help you manage and track your fish health, the health of the fish that you're definitely going to be selling in the market. So I think that's a very interesting way to deploy AI, and the fact that they have raised some money for this, like they've already raised close to $1 million already to start deploying this technology to see how we can improve, fish processing, fish farming, and all of the likes. It's very interesting, and I'm very optimistic about what AI is going to, like, basically already we know that there might be an AI buzz. Not there might be, there is an AI buzz, but in the real sense, it has a lot of it has a lot of benefits when applied to things that could grow our economy, okay, in businesses. So I think that businesses need to look at creative ways to deploy AI that's going to, eventually reduce their cost of doing business in the future, not looking at it now. So yeah, this is definitely something to watch out for. And kudos to Fishcluster on, being innovative and raising some money for that sort of move. Now, that's the only thing that we have on the watch list. And I want to say on that note, thank you for watching Across Markets, this episode of Across Markets with us. Please do not forget to like, share, and subscribe, and leave a comment if anything that we spoke about in this episode resonated with you, or it's intriguing to you, and you have some questions, you have some thoughts. Please do leave it down so that we can also be a part of the conversation with you. Then please do not forget to also follow us on all our social media platforms. This is Business 360 on Instagram, LinkedIn, TikTok, and Facebook. All right. And again, thank you so much for joining us. I remain Joy Abia, and
Very Fishcluster. See you on our next video.